Good morning, guys. Okay, so first trade of the week from Monday the 2nd of March it was. But first of all, I didn't post up last week, so what I'm quickly going to do is bring that up. Now, last week I started with a loss, unfortunately. The markets were crazy volatile, so there you go. This one right here, so 901. Took me out of that trade for a loss. Markets were incredibly volatile and they have been really since last week. So I started off with a loss. After it, I wasn't entirely happy with the setup, if I'm being honest. I mean, it was okay. It was a fairly decent setup, but because the markets had been so volatile coming into the start of the day, I really should have been more cautious. And then I took another couple of trades. That's break even. And then later on, I got a fairly decent win. So with this trade from this Monday, coming into the market, I'd kind of been looking at it since Friday and kind of telling subscribers, okay, we're now down into some fairly key support levels. The market has been incredibly bearish. I mean, they've sold off an insane amount. The volatility has been so high on every market, but FTSE and DAX, the ones that I look at, have been going crazy. After such a strong sell and down at such key support levels, I was basically saying, okay, so now everyone is selling. All the retail traders have kind of piled in and they're saying to themselves, oh, this is amazing. The market's just going to keep collapsing because of coronavirus. I want to make some money. But we're down at key levels, and that's likely a potential, at least bounce point, if not a place for a pretty good retracement. So that's what I was looking at coming into Monday, but then the position that's set up initially was actually a sell position. So going into this one, I was kind of a little bit more cautious because I was still expecting the bullish to come in for that day. And I didn't want to kind of be trapped on the wrong side of it, especially not at the start of the week, end up with a loss at the start of the week. Again, the same as the week before, which I always find kind of sets you up in a little bit of a negative frame of mind. So I got into this position, made sure my stop made sense where it was positioned, and then I'm basically just following the trading plan. So with the trading plan, I'll mark up the position on the chart where the market has to come down to. And if it doesn't test there, I'm in that trade until it's a loss. So I have nothing to do until it gets to that area. And then what you can see, I'm actually going to speed this up because the video is like, the trade was like 30 minutes, 35 minutes. What you can see is me taking a lot of heat on the trade. Now, it's normal when you're taking trades, most of the time you're going to be taking heat, but when it kind of extends like this into a fairly long trade, I mean, sometimes they can last for like an hour, 2 hours, that's when my weaknesses can start to come forward. So if we're looking back at the video that I just posted on Monday, kind of identifying and fixing emotional trading step by step, one of mine was allowing the kind of intraday price movements of each candle to put me into a mess and cause me to make bad decisions. Now, I already know my trading plan. I know it inside out, back to front. I know it works. I know that this trade has set up well, and I know that it has to test at least the level that I've identified before I come out of that trade, or before I consider doing anything, stop the break even, exit, or whatever. Now, if I watch the chart, I make mistakes. If I continue to watch every candle and every kind of point movement up and down, and I start to kind of look at it and think, oh, but this candle is maybe a pin bar going against me, maybe I'm making a bad decision here. If I start doing that, I start to make very, very bad decisions, and it ends in disaster. So what you can probably see me doing in the video, I am going to speed it up as I mentioned, but I'm not really looking at the chart a whole lot. The reason I'm not looking at the chart is because I know what I'm waiting for, and I don't need to be staring at the chart. And I know if I stare at the chart, I'm going to make mistakes. So you can probably even see my dog turns up during the video. I actually flip the camera down to the dog. I'll try and slow that down so you can see her wandering over. But she's coming over for a pat. It's almost like she's got a sixth sense and she can tell when I'm in a trade, or especially when I'm doing a video or something. She comes wandering over and that's when she wants her attention. So I'm doing other work, I'm patting the dog, I'm looking at the screen every kind of few minutes. I only really need to look, every 5 minutes usually. And I'm not getting sucked in and I'm not getting too focused, because when I do that, I make mistakes. And that's one of the things about identifying your weaknesses. You're not going to become a robot. You're not going to become perfect. You have to understand where you tend to go wrong and then address that area. And one of mine is screen watching when I'm in a trade makes me screw up. So I don't do it. And then as you can see, the market spikes down, hits that level. And then we've got quite a lot of support down there. I'm still looking at the market, expecting it to make some sort of bullish bounce. And so when it starts to hesitate, I just close out the trade. And I take the profits, I lock it in, and I move on to the next setup. So not an easy trade, but a trade where I'm following my trading plan and addressing my weaknesses. And that's what trading is all about, really. It's about not allowing my emotions and, to an extent, my kind of personal opinions cloud what it is that I'm actually doing, cloud what I know that actually works and is actually going to make me money, because it's the trading plan that makes me money. Sure, my analysis comes into it, sure, how I set up the charts comes into it, but once that's done, it's the trading plan, yeah? It's just following the steps of the trading plan. And that's where you hopefully want to and will get to as traders. Okay, guys, so that's everything for today. Fairly decent profit, nothing spectacular, especially for the volatility that they're having in this market, but a good start to the week. I hope you're all having a good start to March, and the video was helpful as always. I'm James Orr, and thank you.